Welcome to the Social Studies digital classes. Today our topic is Credit in the Financial System Part 2. Last class we were discussed about credit in the financial system, bank as a deposit money, loan activities in the bank. The loan activities in the bank, the purpose of loans, education purpose, agriculture purpose. For the construction of home, we are taking as a home loan, car loan. These are the main importance of the source of loan activities. Objectives of this chapter: explain the classification of source of credit, identifies the formal source of credit, gives few examples informal source of credit, differentiates between formal and informal source of credit, analyze the importance of self-help groups for the poor. The credit source of credit is two types: formal credit and informal credit. People obtain loans from various sources. The various types of loans can be conveniently grouped as a formal sector loans and informal sector loans. The formal loans are from banks and cooperatives. The informal loans includes loans from moneylenders, traders, employers, relatives and friends, etc. Let us watch video.
Starting time. The credit sources are two types in our country, that is formal and informal sources of credit in our country. Peoples obtain loans from various sources. The various types of loans can be conveniently grouped as formal sector loans and informal sector loans. Majority of the portion of Indian borrowers, they take the loan from the informal source only. Now here in this picture that you can see sources of credit, that is formal and informal. In the formal sector credit, you can see commercial banks, cooperative banks, regional rural banks, even microfinance institutions and even self-help groups. In the informal sector of credit, we can borrow the money from friends. If we borrow money from our relatives, commission agents and landlords and money lenders in our village, if we borrow the money from these sources, this is called informal credit. That commercial banks. This is one of the commercial bank in our country. That's the biggest commercial bank in our country, that's State Bank of India. If you borrow the money from these commercial banks, maybe many banks are there, commercial banks. If you borrow the money from these commercial banks, this is said to be formal credit. And this picture that you can see, one of the cooperative bank that is there in Nalgonda, district cooperative bank. This cooperative banks also lends the loan to the rural people, especially farmers.
Observe this pie chart. You can find out the various source of formal and informal credit sources. Commercial banks 25%, cooperative societies giving the loans 27%, money lenders 30%, landlords 1%, relatives and friends 7%, traders 3%, others 7%. In the pie chart, you can see the various source of credit rural households in India. Out of every 100 rupee credit required by the rural families, 25 rupees was available from commercial banks. Besides banks, the other major source of cheap credit in the rural areas is the cooperative societies. Cooperatives. There are several types of cooperatives such as farmers cooperatives, viewers cooperatives or etc. These cooperatives giving the 27% of the formal loans. You will also notice that money lenders are an important section of informal credit providers in India. The RBI ensure that the banks giving loans not just to profit making business and traders, but also to small cultivators, small scale industries, to small borrowers, etc.
Entire this banking system is supervised by the central bank, that is Reserve Bank of India. In the last class you watched one video which is related to the RBI.
Besides RBI, National Bank for Agriculture and Rural Development NABARD is another organization that facilitate formal credit organizations in the rural India.
And this is called NABARD. NABARD never lend the loan to the rural people because it directly don't lend, but it gives a refinance. Means you whenever we are taking the loans from the RRBs, regional rural banks, and even from commercial banks, the NABARD lend the loans to the commercial banks and regional rural banks to lend the loan the farmers. NABARD means National Bank for Agriculture and Rural Development, which is established in 1982 in our country, and this is an apex bank in agricultural banking. And NABARD, even for rural development, it lends loans to construct roads and even water tanks. Means in the rural areas, all sorts of developmental activities it conducts.
NABARD have financial functions. Number 1, refinance, short and medium term loans, long term loans, eligible scheme for refinance under NFS. Second function, direct finance, loans for food parks and food processing units in designated food parks, loans to warehouses, cold storage and cold chain infrastructure, credit facilities to marketing federations, rural infrastructure development fund, direct refinance to cooperative banks, financing and supporting producers organizations, more direct finance. In these two financial functions, we have more importance to direct finance, NABARD giving to direct finance to cooperative societies. These cooperative societies will giving the loans to the poor people like crop loans, agriculture loans, the people are getting from NABARD loans. NABARD directly not giving any loans to the people, but through cooperative societies NABARD giving the loans. Even though the amount of bank loans given for agriculture have been increasing in recent years, a considerable sections of farmers still do not have access to bank credit. In 2011, there were 14 crores farmers in India. Out of these, only about 5.3 crore farmers had agriculture loan accounts. This means that more than 2/3 of farmers do not have access to the bank loan facilities. These nearly 9 crore farmers have to rely on informal source of credit such as moneylenders and traders. They charge exorbitant rates of interest as you have seen in the earlier examples. Let's watch video.
Now, formal and informal credit, who gets what? This is another interesting one in our topic, that formal and informal credit, who gets what. That formal credit, whenever we are taking from the commercial banks and other recognized agencies, and when we are taking the loans from the non-recognized sources, that is called informal credit. There is no organization that monitors and regulates the credit activities of the lenders in the informal sector. Means wherever we take money from the informal sources, there is no such organization is there. They are able to lend at whatever interest rate they can force upon. See, the money lenders we see in our villages, depending on the conditions of the borrowers, they charge interest rate, the high interest rate that they can charge, because there is no any authority, there is no any monitoring system for money lenders or landlords, even for commission agents. So they can charge high amount of interest rates. See this picture, good credit and bad credit, that you have to evaluate. Why? Because which one is good credit and which one is bad credit. So far you have seen that, because formal credit is there and informal credit is there. Whether formal credit is good credit, whether informal credit is good credit, that the discrimination, that being by understanding all these aspects, that you have to do it. Which one is good credit and which one is bad credit, we can say, because most of the times the rural people, they do not have the access of good credit, so obviously they go for bad credit only. That means they approach to the money lenders and commission agents and other people. That's in India, the many only commercial banks and other banks are giving only 25 to 25%, and cooperative banks are giving 27%, but whereas money lenders are lending more than 40%. Dear students, what are the differences between formal and informal sources of credit? Why should credit at reasonable rates be available for all? Should there be a supervisor such as the RBI that looks into the loan activities of informal lenders? Why? Let's discuss. Do you think that the low share of formal sector credit for poorer households has been one of the factors for farmers' distress in Telangana? That means distress means nowadays we have been seeing in papers, newspapers and TV channels that the farmers are committing the suicide because of lack of credit. So do you think that is the proper credit is not available for them? Let's have a discussion on this particular issue. see this particular picture, can you recall anything? Because in the day-to-day life we used to see such type of activities in our rural areas, especially in our village. Our mothers used to attend every month or maybe weekly once. In some areas it may be weekly once, in some areas it may be monthly. Can you recall anything? See, here is the video that the organizer is giving some message to the people who assembled there. Essentially we call here as supervisor. She bought one book. That means animator means a group head, as we can call her as a leader. There should be two people in group, leader and assistant leader. See, they are sitting around and they are electing their leader, and one has to write the accounts. See, they gave one name to their group. Again, how frequently they are having the group meetings, that the supervisor is asking. And how much they want to save monthly, that also they are discussing. See, they want to save 100 rupees per month, and every two weeks they are going to meet. What you understood with that video and that photograph? See, in our villages it will be there, that is called self-help groups, and these self-help groups are working for the poor people. Self-help groups for the poor. Getting a loan from a bank is much more difficult than taking a loan from informal sources. Bank loans require proper documents and collateral. Absence of collateral is one of the major reasons which prevent the poor from getting bank loan. In the previous class we discussed about the collateral securities. If the person is unable to provide collateral security, so they cannot access the bank loan. It's very difficult to get the loan from the bank until unless if you do not have collateral security. But here the people, 15 to 20 members, self-help groups people, they are forming as group. As we know how it works, it is they will form as a group and they take bank accounts and they save some amount, maybe whatever the convenient that is there for that group people. So this self-help group contains 15 to 20 members, usually belonging to one neighborhood, who meet and save regularly. Saving per member varies from 25 to 100 rupees or more than that, depending on the ability of the people to save. Members can the members can take some small amount of loan from the group itself to meet their regular needs. The group charges interest on these loans, but this is still less than what the money lender charges in informal source of credit. After a year or two, if the group is regular in savings, the group is eligible for loan from the banks. This bank linkage enhances the loan amount available to all the members. Loan is sanctioned in the name of the group and it ensures that the loans are paid back. The trust and pressure among the members make this possible. Important decisions regarding the savings and loan activities are taken by the group members. The group decides the terms of credit. Also, the group members are jointly responsible for the repayment of the loan. Any case of non-repayment of loans by any one member is followed up seriously by the other members in the group. Because of these features, banks are willing to lend to the poor women when organized in self-help groups, even though they do not have any collateral such as. Collateral usually kept by banks is not necessary. These loans are meant to create self-employment opportunities for the members. For instance, members take small loans for releasing mortgaged land, for meeting working capital needs, for example, buying seeds, fertilizers, raw materials, and many more like bamboo and cloth. Even in our areas that we can see that the women, they take the loans and they prepare like candles and agarbattis like that. For buying housing materials, for acquiring assets like sewing machine, handlooms, cattle, etc. Moreover, self-help groups are the building blocks of organization of the rural and urban poor. Not only do women become financially self-reliant, the regular meeting of the group provide a platform to discuss and act on a variety of social issues such as health, nutrition, domestic violence, and etc. These people will have even insurance. Normally the insurance company, they do not give the policies. The women who are illiterate and who are widows who crossed more than 50 years of the age, but the self-help groups together, they are giving insurance facilities to the poor peoples also.
Now you understand what is the formal credit and informal credit. Formal credit giving the commercial banks, cooperative societies. Informal credits, we are getting the money lenders, traders, friends, relatives and other sources. These are the important source of credit. Second thing, self-help groups. These self-help groups also, did you understand that? Self-help groups, you are very familiar with these groups. Dear students, how is a loan to an SHG member different from an individual loan by a bank? Collateral security is necessary for SHGs. What is the role of microfinance institutions in the providing loans to SHGs? These questions you can discuss in your classroom with the help of your teacher.